Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today, we're cracking open Hess Corporation's latest 10K. Get ready because this report has more twists than a pretzel. We're talking mergers, arbitrations, and enough oil reserves to make your head spin. But before we get ahead of ourselves, let's get into what this report is about. Hess is sitting on a potential gold mine with its Guyana operations, but a wrench has been thrown into the works. Chevron wants to buy Hess, but ExxonMobil and China National Offshore Oil Corporation are crying foul. Did someone say lawsuit? For those of you who are new here, the 10K is an annual report that publicly traded companies are required to make to the Securities and Exchange Commission, or SEC. It gives investors a deep dive into the company's performance, strategy, and potential risks. This Form 10K is for the fiscal year that ended December 31, 2024. So buckle up as we explore the exciting world of Hess Corporation. The company also has a share repurchase program, but because of the Chevron deal, Hess is being careful about repurchasing shares. This could definitely impact the stock price. Let's talk about what Hess actually owns: oil and gas. At the end of 2024, Hess says that they have about 1438 million barrels of oil equivalent in proved reserves. That's a measurement combining the amount of oil, natural gas liquids, and natural gas that they have. Of that, most of it is crude oil, 891 million barrels to be exact. Of those proved reserves, the filing indicates that 42% are undeveloped reserves. Basically, that means that those reserves are untapped and will need more capital to extract. The report is optimistic because they are currently extracting resources, but the big question remains whether they can keep pumping out oil and gas at the same rate. Now, the all-important question: how much black gold did Hess pump out of the ground? The report states that Hess produced about 111 million barrels of crude oil in 2024, up a significant amount from about 82 million barrels in 2023. They also produced about 28 million barrels of natural gas liquids in 2024, a slight increase from around 25 million in the previous year. When we combine it all, Hess says they generated about 176 million barrels of oil equivalent in 2024, compared to about 144 million in 2023. Let's move on to the prices at which Hess sold their product. The report says that Hess sold crude oil for an average price of about $77 a barrel, including hedging. In 2023, it was roughly $76 a barrel. Natural gas prices actually took a tumble, as the average selling price was $4.20 per MCF, lower than the $4.32 per MCF last year. Hess produces oil in a number of locations around the world. Those include the good old US of A, Guyana, Malaysia, and Thailand. Their most profitable source appears to be Guyana. They have had over 30 discoveries in the area. Hess has made some promises to sell gas in the future. They estimate that the total volume of natural gas that they are on the hook for is about 420 billion cubic feet. They also have promises to deliver gas in the backend through 2037. Now let's talk about what Hess did to protect the environment and its workers. Like any oil and gas company, they need to follow a ton of rules, and those regulations might get stricter over time. They spent about $17 million to clean up old messes in 2024, and they expect climate change and other sustainability pushes will force them to spend more money and potentially change how they do business in the future. Let's move on to how Hess treats its employees. They're trying to be more inclusive and diverse, but like any company, they could always do better. Hess wants to foster a workplace free from discrimination and harassment. The report lists the executive officers of the company, including John B. Hess, Gregory P. Hill, Timothy B. Goodell, and John P. Reilly. All of these individuals have held leadership positions in Hess for a number of years. Reading through the risk factors, you see that the price of oil is a big deal for Hess. This is a no-brainer because if oil prices go down, then so will profits. They also compete with other companies, including ones that are much bigger than them. These competitors may also want to get involved in exploration and production activities, which could make it hard for Hess to grow. One risk to also look out for is computer systems. If their computer systems go down or get hacked, it could mess with their ability to extract, process, and deliver oil and gas. They might also have to pay money to fix the problem. There are risks associated with accessing capital. All three major credit rating agencies that rate Hess debt have assigned an investment grade rating. However, if those ratings get lowered, it could make it tougher for Hess to borrow money. This would reduce their ability to execute their business strategies. Finally, governments might pass laws that impact Hess as a result of climate change and sustainability. There is a risk for a decrease in sales volumes, revenues, and margins if demand for crude oil decreases in the coming years. Scroll 4176.